welcome to BloombergQuint. The concept of money is so ubiquitous in our lives that we rarely think about it. It's the cash in your wallet, it's the money in your bank account, it's even the credit limit on your credit card, perhaps. But over the last few years, since we've started hearing and talking about cryptocurrencies, there's the specter of a change in the nature of money. There's Bitcoin, there's Ether, there's stable coins, and now we're hearing about central bank digital currencies. What's going on? How do we wrap our heads around all of this? And is money changing? Joining us to help us through some of this is Neha Narula. She's the director of the Digital Currency Initiative at MIT Media Lab, and she's kindly agreed to help us wrap our heads around all that's happening. Neha, thank you so much. It's a pleasure to have you here.
Thank you so much for having me.
All right, let me start by asking you, Neha. I looked up your TED Talk, which is a few years old. And I recommend it to anybody who hasn't seen it. But you talked about the fact that in the future, there is potentially a change in the definition or in the nature of money. But you also, similar in the same vein, said that this is very early stages right now. It's been a few years since then. What has happened? Has this sort of revolution, if I can call it that, moved further?
Yeah, it has been. It's been about 4 years, almost 5 years since the TED Talk. It was in 2016. At that point, Bitcoin had been out for about 8 years, and Ethereum had just come out the year before. So we were relatively early on. It was well before people had started issuing all sorts of tokens, and well before an innovation in cryptocurrency known as decentralized finance, which has been happening this past years. And also well before central banks really started to dig in and take a very serious look at issuing their own digital currency. So in some ways, nothing has changed. Bitcoin is still going, Ethereum is still going, and in some ways, everything has changed. We've really seen a lot more use cases develop for what cryptocurrency can do, and we've seen it embraced at almost the highest levels. So that's all been very interesting. It certainly hasn't developed the way that I predicted it might necessarily, but it's been even better than that. And what we really have here is we have this balance between cryptocurrency on the one hand, which is not issued by a government at all. It's based on a software protocol that's running on a network of participants. And then we have more sort of, I guess I'll say, traditional systems. So we've seen central banks take a look at issuing digital currency, and that would be fiat currency, like your dollar or your rupee or your pound. And so these two things are kind of moving forward at a very fast pace.
And I'll get to the CBDC part in a minute. In previous years, we've seen these boom and bust cycles in Bitcoin and, all sorts of other Ether, Dogecoin. Some of the names don't even sort of, they change so fast. Many of us don't know how to keep track. My question is, in this round, we've obviously seen the price of or traded price of Bitcoin, et cetera, go up, but there seems to be a little bit of a difference. Some of the traditional establishment players, be it the PayPals, the MasterCard, seem to want to get in on this. What are they seeing right now? Are they seeing these currencies actually being accepted as currencies more than just assets?
I still think that it's very, the use of these things as payment mechanisms is still not very high. Unfortunately, we don't have very good data on exactly who is using cryptocurrencies for non-investment purposes and exactly how they're using them. I have heard stories, anecdotal evidence of people using it for remittances, using it for payments, using it as a medium of an exchange. However, I think that by far the dominant use case for cryptocurrencies like Bitcoin is as a store of value. So people are investing in Bitcoin the way that they might invest in gold, for example. They're using it as a way of storing their wealth. And that's what we're starting to see. That's a lot of the uptick that we're starting to see in the US, where we're seeing very large companies, Elon Musk, for example, MassMutual is another example, Square, are putting significant amounts of their treasuries, the company's balance sheet, in Bitcoin. So they're buying Bitcoin with their company savings, so to speak. And we're seeing individuals do that on a mass level as well. In addition to that, we're seeing companies like PayPal start to engage in cryptocurrency sales and trading. So PayPal, for example, allows you to buy Bitcoin, Bitcoin Cash, and Litecoin on their platform, which is really interesting. And I can only imagine that these companies are seeing what other companies like Coinbase are going through. So Coinbase is a company in the U.S. that has built its entire company on the cryptocurrency phenomenon, and they are going to be IPOing this year, and they're hugely successful. So I can only imagine that other companies also want to see if they can get in on this business and to figure out how it aligns with their future strategy.
But the criticism of these cryptocurrencies in the nature of payment instruments, mediums of exchange, that they are too volatile, far more volatile perhaps than the goods and services they buy, continues to be in place. And also the ease of transacting perhaps continues to be not there. And in that sense, those two impediments to these being currencies remains.
Absolutely. These are still very hard to use, and they're very non-intuitive, and most people don't really understand how they work. And of course, the prices are still extremely volatile, which means that they're not very good for using for everyday transactions. It's not a great thing if the sandwich you buy costs 2 times the amount that you paid for it the next day, which could very easily happen if you were making that transaction in something like Bitcoin. That's why we've really seen the dominant use case be as a store of value, a long-term hold for people who can ride out the volatility. Now, it still remains to be seen whether these things will become less volatile over time, whether the user interfaces will develop that make them easier to use. I can only hope that they will, given that all of these companies are starting to get into it as well. And we're also seeing the rise of something called stablecoins. So stablecoins use some of cryptocurrency technology, but they are not as volatile as cryptocurrencies like Bitcoin and Ethereum and Dogecoin. Instead, stablecoins actually peg their value to a known asset. For example, there are stablecoins in the US that peg their value to the US dollar. And we're seeing a pretty significant rise in the use of stablecoins as well. Now, this doesn't totally solve the ease of use problem, but it does at least address the volatility.
Okay. Neha, so, one of the things that governments, and certainly this is true of the Indian government, worry about is the fact that these cryptocurrencies can be used for money laundering in particular. I'm just wondering, is there work going on out there to try and address that concern, to make governments a little bit more comfortable with allowing these to exist? And I'll get to the point of where they start impinging on monetary independence. But just in terms of being able to tackle this concern on money laundering, is there work going on out there?
Absolutely. There's a lot of work going on money laundering. For example, the FATF, the Financial Task Force, has put out a lot of rulings on how exactly the trade of virtual assets should happen. In the US alone, cryptocurrency exchanges are starting to get together and determine a data model and format for how they're going to do KYC, or know your customer, on transactions. However, I have to say that we just don't have very good data on exactly how cryptocurrencies might or might not be used in illicit transactions. We don't really know how significant it is compared to, for example, the use of cash in illicit transactions, or even the use of the existing banking system in illicit transactions. So we need much, much better data on this. We also need much better data on understanding the normal use cases that people find in this technology. Also, I'll say that any technology has growing pains. The rise of the internet coincided with its use to, for example, trade music files illegally. And now we see the development of applications like Spotify and Netflix, where we can stream media legally and pay for it properly. And so really what happened in those earlier stages was a mix of illegal activity that slowly transformed as the technology was finding its place, as we were developing the rules and regulations needed to transact safely.
Without dwelling on India per se, but in India, of course, we're still trying to find our way through regulation. There's been talk of a ban. There's been an attempted ban by taking the formal financial system away from the cryptocurrency universe. What is the dominant view that governments around the world have taken? Some large countries have tried to ban cryptocurrencies, although there are others who say you can't really ban them. They just go into sort of an underground place where you don't know that they exist, but the peer-to-peer transactions in these may continue.
Yes, exactly. The entire point of the technology is that it's designed in such a way that it's very robust. And that not only means robust to attacks by hackers or by machine failure, but it also means robust to others who might want to take down the technology. And so, given that it's designed this way, I think it's very important for governments to take a good look at the technology and decide how they want it to integrate with their financial system. And especially think about how to take advantage of the technology. I would say that the dominant view globally has been a sort of wait and see approach. Let's begin to integrate it first with taxes, then with KYC AML, regulating cryptocurrency exchanges. And we're starting to see more and more integration. For example, in the US, there are several companies that are proposing Bitcoin ETFs, exchange traded funds, so that customers can access digital assets through more traditional means. So I'd say that the dominant view is embracing it, but embracing it in a way that brings it under the umbrella of regulation.
Let me say, move the conversation to CBDCs. Now, again, these have existed, or the conversation has existed for a few years, but in the last 12, 18 months, there seems to be a certain urgency to it. Where is that urgency coming in from? Are regulators, central banks starting to worry that if there is a demand for digital currencies, let there not be a parallel system that comes up? Let us try and step in and fill that demand.
Yes, exactly. However, the worry about a parallel system is not a worry about cryptocurrency per se. So I think in 2014 and 2015, there was sort of a question of, oh, Bitcoin, could it end up displacing some fiat uses of payments? And what they found was, no, not really. People aren't really using this to make transactions. However, two things came out of the rise of Bitcoin. Number one is something called Diem, formerly known as Libra, initiated by the company Facebook. Which is a digital token run on blockchain technology. And Facebook has indicated that they are interested in integrating it with Facebook Messenger and WhatsApp and their own payment and transaction systems. So initially, when Libra, as it was known then, was first proposed, it was not a fiat currency. It was going to have its own value based on a basket of different cryptocurrencies. And note that Facebook has over 2 billion users worldwide. That is more than any nation. And that, I think, more than anything, is what has gotten governments and central banks really interested in learning more about digital currency and pursuing it in a much stronger way. Because if a company like Facebook were to launch a digital currency, and if it were to get adoption, and if it were completely separate from fiat currency simply based on a basket, they would have the ability to enact monetary policy, essentially, and it would reduce the ability of other countries to be able to enact their own monetary policies. A lot of smaller countries worry about what's called dollarization. So instead of citizens of the country using their native currency, they might switch to dollars, which reduces the ability of the government in that country to enact monetary policy. So you could imagine something like Libraization, or as it's known now, Diem, where a currency like that could get adopted on mass scale and really affect the ability for a country to regulate its economy and financial system.
This is a slightly silly or a naive question, but if some of this, cryptocurrencies first and then some of these stable coins are emerging out of partly a place of trust in governments, trust in establishment organizations, just bringing in a CBDC, is it sort of fallacious to think that you can fulfill that demand with a CBDC? Because at the end of the day, CBDC will be an establishment product or a payment mechanism?
Yes, that's a great question. I think we're seeing people approach digital currency from different perspectives. So there, in fact, are some people who are very interested in having a form of a store of value that is not linked to governments at all. That is a big draw for why they are investing in things like Bitcoin or Ethereum. However, there is, I think, another desire, which is to have digital money that is easier to transact, that is faster to transact, cheaper to transact, and comes with interesting features so you can build interesting applications on top of it. And so I think when it comes to that use case, central bank digital currency has a role to fulfill. I think of it more as modernizing our payment system and bringing our payment systems and infrastructure into 2021. Right now, they're a bit out of date. We pay very high fees often when it comes to things like credit card payments or cross-border payments, things like that. And so where CBDC really has a role is in modernizing our payment system and providing a new platform for innovation. So in that respect, I think there is a role for CBDCs. People who are interested in holding value that is not tied to a government will continue to use cryptocurrencies.
Okay. So when we start talking about or thinking about the features of a CBDC, this is a liability on the central bank. It would be in some ways equivalent to cash potentially, although I know there's a conversation of whether it's cash-like or deposit-like. But if I look at this as a consumer, here in India, I can transact. Obviously, I can do large value transactions digitally. I can use cards. We have a unified payment interface on which I can do real time payments. There is a legitimate question out there saying, why do I need this? What's this going to do for me?
And India might not need it. So India is a bit unique in that I believe you guys already revamped your payment systems and designed UPI, which seems to be, from my understanding, working very well. I haven't used it myself. And that is certainly one type of architecture to go with. However, it's unclear that we can replicate exactly what India did in other countries. For example, other countries don't necessarily have India's root of trust based in the digital identity system. So many other countries don't have a digital identity system that is supported by the government. And so a different model is going to need to emerge. It's unclear if they can create something like what India created or even have the circumstances arise to have the levels of cooperation. So other countries are going to pursue different architectures. And I think you hit on a couple of important points there, which I want to emphasize. CBDC, or central bank digital currency, is in almost all the cases a liability on the central bank, and it's considered to be the equivalent of cash. Most of the central banks that I've been speaking with are not interested in replacing physical cash with CBDC. So it's not necessarily a replacement. They think of it more as another option. So another tool that's available for people to use.
What are some of the tough questions that central banks will need to mull as they try and work on these concepts? The BIS has put out some foundational principles: do no harm, coexistence. It should promote innovation and efficiency. Smaller or no, actually not smaller, but more minute questions as to, do you pay interest? Is there a limit on the holdings because you don't want to disrupt your banking system immediately? There's a whole plethora of issues to deal with here.
Absolutely. And that's why my group at MIT spends so much of our time researching this, because there are so many outstanding questions. You named quite a few of them. I think one of the most important is, what type of effect will CBDC have on the monetary system in a country and globally? And a lot of that depends not just on the policies around the CBDC, but also how it's implemented and how it actually works. So in some sense, we have to design the technology and consider the policy in tandem. And that's what makes this so challenging. You can't just go off and decide, I want my CBDC to have properties X, Y, and Z. You also have to think about what the technology can even support and how people might use your CBDC in ways that you didn't expect. So I think number one is definitely making sure that it doesn't disintermediate lending or important sort of features like that in an economy. In addition to that, other sort of thorny questions that banks have to think about is, one is cross-border. How is this going to potentially interoperate with other CBDCs or other parts of the financial system? If we want to realize the benefit of a platform for innovation, we have to think about that pretty early on. The other big challenge is thinking about privacy and compliance. So when people use cash, there isn't any surveillance happening there. There isn't any record of the transaction going in a database or being sent to a company or other intermediary. And I think it's a really important question to consider what parts of that we might want to replicate in the CBDC experience as well, especially as people in the world globally are starting to realize the impact of having all of their information and personal data collected either within a company or by governments. It's number one, it can be very difficult to actually protect that data effectively. We've seen hacks here in the US recently where a lot of data has been leaked. One way to avoid data being hacked is not to collect it at all. However, when we start to think about privacy, then we must consider the question of compliance. How do we prevent illicit activity on the platform? We can't just have everything be private completely. So I think this is going to be a really important concern in the coming years.
Okay. So Neha, there are a couple of countries over there out there. I think Bahamas is a small example. Frankly, I haven't studied their model. China apparently is doing some pilot programs. What has stood out to you from some of these as sort of important takeaways that can then be replicated by others? I know it's early days, but what's standing out for you right now?
I think the thing that definitely unifies Bahamas and China is mobile first. So we are really thinking about mobile phones and digital wallets and a really mobile economy. However, China and the Bahamas had, I think, very different reasons for thinking about a CBDC. In the Bahamas, it was very much about financial inclusion. So thinking about how to reach all of their citizens with digital payments. Whereas in China, I think it's more a matter of having a public option as compared to the very, very large predominant digital payment systems that are currently in China, run by the companies Alibaba and Tencent. So I think in China, it's more about making sure to bring digital payments back under the sphere of the governments, whereas in the Bahamas, it's much more about financial inclusion.
All right. As a last question, I've thrown a lot of specific questions your way, but I'd like to hear from you on what's occupying your mind space and the digital currency initiative's mind space right now. What is, the key questions that you're grappling with, along with all your consultations with central banks that I'm sure you're having?
So I think that our key questions lie in two predominant areas. So one is really about the technology. How should this be built? And how can we build this in a way so that we're not just replicating the existing financial system, but instead we're building something new and better than what we have today? It would be very easy to implement CBDC in a way where a user couldn't even really tell that they were using CBDC and they didn't really see any differences in the way that they transact. And that still might be the case, but I hope at least that we can improve things like access, privacy, and also the price, the transaction fees, to lower those. The second major area where I'm really tracking what's happening is thinking about how all of these different areas are going to converge and what is the role of the public sector versus the private sector. Almost everyone agrees that it's probably, we should rely on the public sector to do what it does best and the private sector to do what it does best, which is innovate. And so how do we create CBDC in a way that's responsible and at the same time promotes a platform of innovation for the private sector?
All right, Neha, I'll leave it there. Thank you so much for spending time with us and helping us understand some of this just a little bit better. Appreciate your time here on BloombergQuint.
Thank you. It was a pleasure. Thank you for having me.
Thanks for watching Bloomberg.